Hello, Mish. Another Monday video. How are you doing? We've definitely got some interesting price action today.
We sure do. And what's so interesting is that I've been writing so much about the economic modern family and looking at the weekly charts because it's such a good period of time right now to step back and zoom out a little bit in terms of the time frame. And so looking at the SPY chart that you have up right there, of course, it looked like it was horrible breaking down under the December lows. And yet it stopped at a level that we don't necessarily see at a big chart point, nor is it particularly near the 50-week because it's much stronger than, let's say, the small caps. But if we move to the small caps, which I do think would have been extremely important if they kept falling, they stopped not only at the 200-day moving average today, but also at the 50-week moving average. So did transportation. And if you're into, obviously, the growth stocks, so did the semiconductors. So when they held, and then we started to see the buying come in first in the Dow, by the way. The Dow was green today, so that was also interesting. The Dow
Uh,
was green pretty much from early on in the morning. But once I saw the Dow go green, and you can see, right, it hardly even broke down.
I didn't even take out the lows there.
Right.
Interesting.
So I watched the Dow being green. There was a bunch of stocks on the screen that were green that were kind of interesting. And then on top of that, we saw the major support come in. So at least we knew at that point when we saw IWM, for example, go from 214, now it was at 215, then it was 216, it wound up closing over 217. This rally became not only a great signal of a technical bounce off of major support, but perhaps, the bearish calls, the narrative are always premature. People tend to get bearish at the bottom and bullish at the top. So that led Geoff and I to have a conversation before we started recording about what am I doing right now? What would I recommend and Geoff recommend you do right now? Because this is an extremely interesting time, right? So first of all, we already know now that we have a great kind of cut line in the sand, even if you just want to look at NASDAQ. And by the way, he's showing you the equal weight. That actually outperformed today too. Uh,
Yeah, it almost took out yesterday's high. It barely
right.
even broke down. That's what caught my eye today. And then the other thing that caught my eye was the mid caps that have a key reversal, total engulfing pattern of Friday. I mean
Right.
that's a bullish short-term pattern. So to your point, like there's segments of the market here that really did not go down today.
So that leads us to tomorrow, right? So now we know at least we have this incredible line of support, 500, as you can see here, right here in NASDAQ, 575, 575 in SPY, 214 in IWM. We can say 76 to 78 in retail. You know how much I like to look at that. Semiconductors, you've got 240 to 237. All these things right now are really important support areas. So PPI is coming out tomorrow, right? And then CPI, or I couldn't remember. We couldn't remember if it was CPI first or PPI first. Doesn't matter. The point
Yeah,
is, in
they
two
both
days,
come out.
right, we're going to know a lot more about, and I still think it's a lagging number because it's not going to take into account oil, which has, of course, done nothing but rally over the last week. But nonetheless, let's say it comes in hotter, and I think the expectations are for 2.7%. Some people think 2.9%. If it comes out hot, then we at least know where things really break down from. And then the way I'm looking at it is at some point, we will have a buy opportunity. It's just going to be obviously later rather than sooner. If the numbers are relatively mild or it's already baked in to have a little bit of a higher expectation, we have a good short-term situation. And look, TLTs is a part of it too. That also turned around. And so the TLTs are something to watch. If they go down, excuse me, if the yields go down and the TLTs go up, and we have some kind of a buyable bottom that we've got put in place today with some follow through tomorrow, you have to remember this. And this is my third point. And this is what I'm waiting for. Short-term trading, fine, but we're still looking at that January trend trade. And it happens to fall out on Thursday. Friday may usually in a normal market be the day that you'd say, okay, things that are breaking out look good. But then we have a 3-day weekend and then we have an inauguration, right? And then Tuesday will be Trump's first day in office. So I think that FOMO, which hurts so many people, we can have a rally. If it takes out the January calendar range right after inauguration, great. If it doesn't, then we'll have the January highs as some kind of level of resistance. And if we don't even get there because those numbers are hot, then you'll be so glad that just looking at today's one-day action didn't kind of suck you in. And that's exactly how I'm looking at it right now.
Yeah, and I, I'm back to the spies. It's got a ways to go. I mean, we got to go all the way up to 600 to take out the highs of the year. That's a pretty big move. Probably not going to happen in 1 or 2 days. But who knows if it gets excited. So you've got some time to wait, and you'll probably have some time to think about it. The other thing is if it moves lower, as you were pointing out, the 200 is all the way down here. Like there's
Far,
plenty of room
right?
here for opportunities in terms of not feeling like you have to jump in right now.
And by the way, you know where the 50 week is in the SPY? It's at 473. So it's even lower still. And even more interesting than that, this is what my daily's about today. NASDAQ has not been below the 50-week moving average since, you want to take a guess, Jeff?
NASDAQ hasn't been below the 50-week. I'm gonna guess, well, it's got to be 2022.
2023, actually. It was below it, and then in 2023, right in January. So here we
Oh,
are,
okay. Yeah.
January.
The bottom, bait the bottom.
Yeah, I mean, these are the silly things that actually get me excited. But in January 2023, it was below and then came through it, took out the January calendar range high, and
Yeah.
off it went. So
So
now,
here it is right here. Yeah, that
exactly.
that was my, like, we haven't gone below it in this bull market.
Right. So
Yeah.
you definitely don't want to see it below, number one. Number two is it could go down to it, which would still be nasty, especially for some of the other weaker areas. And number three is that even if it doesn't go below it and we get a little bit of a bounce, I still would want to be somewhat cautious. And of course, NASDAQ could do it first because it's the least concerned about interest rates and strong dollar because that's where, all those big companies, growth companies live. And we're in earnings. Oh, by the way, earnings season. Let's not forget about that. That starts this week too with the banks. So all these reasons are, I guess the bottom line is what I'm trying to give you is practical reasons why it's okay to wait it out a few more days, unless you're so dying to do something or you saw some kind of key reversal and it's not going to be impacted by everything. But we know one thing, liquidity crises can be impactful to everything. But if you can be patient, you have all these reasons: earnings, inflation numbers, calendar ranges, new president, and a breakdown in the indices, all in caution phases, even if everything sort of held support as we came into today.
Yeah, for sure. Good time to wait. While we're on the weekly charts, I just thought I'd pull up TLTs here. Because we are sitting right at a critical level. I don't know if you can see that line
I can,
from my cursor.
yeah, it's coming in right around that 84.40 level. Yeah. So, and look at the real
Yeah,
motion, by the way, too.
this is huge.
What was so interesting on the weekly real motion charts too is it actually wasn't really doing all that badly. It just broke the 50 today or last couple of days, interestingly enough.
Yeah, I mean, if my interpretation of real motion is this is where you should hold. Like this whole thing is trying to turn, takes a long time. This is where you should hold on real motion.
Right.
But that's not really the reason. It's not enough of a reason to go in and buy. But if it were to turn around, this is an interesting spot.
Absolutely. And I think, the last thing I'm really going to say here is that my list of stocks, believe me, I'm watching them very carefully. And some of them on my top 10 were actually green today. Salesforce was green. AMD was green. Elf was green. So when I start, and they were green in the morning, like before the market actually rallied. So, I'm telling you from my own experience, I'm thinking, oh my God, I mean, am I not making a mistake waiting like I'm telling everybody to do? And then I say, no, you're having the same FOMO. That's what you're telling other people to not have. So essentially, look, yeah, I mean, look at that elf today.
That elf looks great. Yeah.
In fact, it's right there at the January calendar range high. I'm more concerned that it's going to be so much higher by the time that it resets in a few days. But I also know, so what? Even if it's higher, this is still a stock that's been beat up to the pulp. This is my point. It's been beat up to a pulp. I liked it at 105. I went on Charles Payne, said at 105, it was like at 110. He's like, Mish, if you like it, I'm long it. I've been sitting for a long time. Well, now it's starting to look a little bit better. My bigger point is even if I don't buy it tomorrow or the next day, and I wait till next Tuesday, where I have a calendar range and a new admin and we can see what's going on, and I have to pay up at 140, big deal. I mean, that's my point. If you really like a stock, then you cannot be too concerned about paying up for it as long as you have a legitimate risk point.
Yeah. Yeah. All right. So we're hanging out waiting for the calendar range and the new president, and then a lot of uncertainty will have dissipated. The world will still be a mess, but we'll be in a better place to make better decisions.
And by the way, these PPI, CPI, I wouldn't count too heavily on them either, because we've just had obviously the horrifying ravage in California. And I think that's going to be a bit of a push to commodity prices as they start the major rebuild. So don't get too comfortable with inflation being licked at this point. Just want to mention that too, but we can talk about that more another time.
Another time, yes.
Yeah.
All right. Awesome.
All right, great. Well, Monday is Martin Luther King Day, next Monday, and Inauguration Day, so there won't be a market open. So Jeff and I will not be doing a podcast that day, but we will see you in 2 weeks, and there'll be a lot to talk about.
I'm sure there will be. All right. Thanks a lot, Mish. Have a great night.
Thanks, Jeff. You too.